All right, welcome to our global macro update, traders. Hopefully you guys all had a great week. I did. But let's get right into it. The big question of the day is, are we entering in a risk-off scenario because of the stock market dump that we had yesterday? Are we going to be looking at more safe havens in terms of currency, in terms of metals, and going to be looking to short equities and crypto? Or are we still on the risk on, in which crypto will be doing well, equities will be doing well? We don't want to be looking at safe havens like gold, silver. We don't want to be looking at longing currencies like the dollar, Swiss franc, Japanese yen. We're looking at Australian dollar, New Zealand dollar, GBP, all that stuff. So that's the big question for today. So let's first start off just looking at the equities, because this is going to be a major player. Let's just first look at the S&P. We did get a bounce here from this morning and overnight, but when the market did open, we got a pretty big move to the downside here. Lots of sell pressure, although we are still holding that 2990-ish area as a previous level of resistance, which is now going to be a new level of support. So we currently see that huge dump, but we are holding at this level. So at this point right now, I'd still say that buyers are still coming in, buying up this asset, and we don't really have a risk-off situation yet. If we do pass this zone, this 29.95-ish level, we do see a pretty big gap until the next major level of support. But at the end of the day, this is, in my opinion, going to be the last level of confidence for the buyers. We can see this as well within the Russell 2000. Very similar chart. We got our key level of support, which was a previous level of resistance at around 1360. Huge jump to the downside, big rally back up. The candle that was green was less significant than the sell pressure, so we're not really seeing any bullish engulfings or anything that would indicate that there's strong buy pressure. Don't really see any wicks to the downside either, so this is just, in my opinion, a halt from the sellers and a hesitation from the sellers to push the price down. So I think that the main thing that we're going to be looking for is the SPX to see if we are going to get another down leg. In terms of the overall equities around the globe, let's look at the VT. We got a massive gap down and a huge bearish day yesterday, and we're getting an inside day today. We are still closing red, which means that the sellers won the battle for today. If it does close here in around 3 hours, but at the end of the day, we haven't made a lower low, and this could just be a consolidation. I think the main thing we're going to be looking at is the SPX in order to see if we're going to break this key level of support or not. So that's going to be the main thing I'm going to be looking at in terms of the equities market. The VIX is also important to understand the level of the volatility. That just went over my head. But it measures volatility, and if you see it increase substantially, it means there's an increase in volatility in the overall stock market, which is not very good. Usually, you get increased volatility to the downside compared to the upside. There's not many situations that have occurred in which the VIX and volatility increases when the prices of assets are going up. Usually, volatility is increased when the prices of assets are going down, and we see that big pump there from around $24 to $34, around 38% in the VIX. So we are seeing the increase in volatility, so you got to be in a position where we can act quickly if there is a shock like we had back in March, because the outcome, if we have a risk-off situation, in my opinion, is that equities will fall, crypto will fall, you'll see a rush to bonds, so the yields will drop, and then you're looking to get basically, I'm mainly using the FX market in order to capitalize on that huge rush to safe haven currencies like the US dollar, Swiss franc, Japanese yen, and then I'll be looking to short currencies like the Canadian dollar, Australian dollar, New Zealand dollar. So these are, or even you can even look at exotics. You could look at the ZAR, which is South African rand. You could look at the Turkish lira. These are some of the more exotic speculative currencies. You do have to consider carry costs, positive or negative carry, because that does play a role in your trading if you are in the FX market. So that's going to be the equities. So let's just quickly look at the bonds. So the right-hand side is going to be looking at the 10-year and 20-year bond yields. When the yields of bonds go down, it means there's more demand. People are buying bonds, so there's less of a yield. And if it does go below this confluence zone around 0.7 for the 10-year and around 1.4 for the 30-year, in terms of the yields, I think it's going to have another move to the downside, which is going to be a risk-off move. In general, people flood to bonds when things get risky, even if they're yielding like not even 1%. It's where people go. The United States Federal Reserve is what in many people see as the safest bond that you can purchase. So that's where people go to if they have billions of dollars that they need to keep preserved due to other equities and investment tools actually depreciating quite substantially. Another thing we're going to be looking at is oil, both WTI and Brent. If oil is going down, that is normally considered a risk-off sentiment move. When oil is going up, it's risk-on. There's higher economic activity requiring oil, which is a commodity, which is good. And when oil is going down, breaking supports, holding resistances, you're most likely going to see a risk-off type situation. And you see negative correlations between gold and oil, and we'll get into positive and negative correlations looking at a 180-day correlation chart at the end of the video, but we're just going to get into the price action of some of these different assets. So that's my take on oil. We are seeing a move to the downside, which is a little bit a risk-off sentiment, and we are seeing a move down in the yields for US bonds, which is a risk-off sentiment. One thing that is keeping me from just fully saying this is a risk-off move is the fact that the equities are still holding our key level of support that we already talked about. But if that breaks down, I think that oil is going to go and fall below key levels of support at around $34, 36 on Brent, 34 on WTI, which is Western Texas Intermediate. And then if we do get the equity move to the downside, I think that bond yields will fall as well, which is then just confirming our overall risk-off sentiment that we are trying to find, create, analyze, whatever you want to call it. Silver has not been doing much, but gold has been doing a little bit better. We are holding that previous resistance at around 1750 as a new level of support. Could draw a descending trend line connecting the lower highs, but at this point in time, there's not really much to do with silver because of the gold and silver ratio moving to the upside, which is favoring a potential long for gold compared to silver. Silver had a huge move when this was going down, but we're holding the previous resistance of this ascending wedge resistance as a new level of support. And we are making a move to the upside with a huge bullish engulfing candle confirming the buyers in gold. So oil's going down, gold's going up. That's definitely a risk-off type of environment. And this is gold right here. We held that previous low really, really well, and we made a slight move to the upside. We got a key level of resistance at 1745. Once that breaks, I do think that we will get a breakout because we've been holding this horizontal consolidation sideways for a while. We're not really seeing a strong move to the upside yet, but if we do break this 1745 zone, I think we do have a strong chance of making substantial higher highs and higher lows. Also, something to note, we got our anchor point, we got 1, 2, and then we got a third touch point, and that previous resistance is now going to act as a new level of support. And this is in confluence with our horizontal zone that we did indicate as a previous level of resistance and support. So key level of confluence both horizontally and with the descending zone now acting as a new support. So gold does look bullish, oil does look more bearish, and that is more in favor of the risk-off sentiment. So that's going to be my view of gold and silver and the metals. And now what we're going to talk about, let's just move this up here and discuss what two baskets that we're looking in. So we got risk on. So let's just type this on. So this is risk on pool, and this is risk off. Oops. That's risk off. So we got two pools. What is going to be on the risk on? Stocks, right? Overall, if you're longing stocks, that's a really poor C. Stocks, that is overall a risk on sentiment. So you're looking at S&P, you're looking at Dow Jones, you're looking at the Russell 2000, you're looking at overall global stocks. If they're going up, that is a risk on sentiment. What's another thing that would be in a risk on sentiment? I would say crypto is in this bundle as well. There's a high positive correlation between Bitcoin and Russell 2000 and the S&P. So we do have to put that in the same category. What else is a risk on thing? I would say oil. So let's just do that. Oil is also a risk on sentiment indicator. And what's another one? Let's go and say stuff like FX markets, like we see AUD. We also see CAD. New Zealand dollars, very highly correlated with AUD, CAD, GBP, BP, and stuff like TRY, which is Turkish lira. You got the ZAR, which is more speculative. Like these two are extremely speculative compared to these. But overall, that is your risk on sentiment assets that you're looking for. And you're looking to short these pairs or these currencies with stuff like USD, JPY, Euro, and CHF, which can't really see that, but CHF is another one there. What else is a risk off? Gold, definitely risk off thing that we're going to be looking at, right? So these are going to be, in my opinion, the main things that I'd like to be looking for longs if it was a risk-off sentiment. So I want to be, let's say we're in a risk-off sentiment, I want to be long US dollar, JPY, Euro, or Swiss franc, or potentially gold, and I want to be potentially short AUD, CAD, GBP, TRY, which is Turkish lira, ZAR, which is the South African rand, potentially oil, potentially crypto, potentially stocks. So that's how I'm viewing it. That's why we need to understand where in the risk on, risk off sentiment we are. If we're heavy on the risk off, that means that things like stocks, crypto, oil, and these currencies are going to be dropping. You're going to want to short those. Whereas if you're on a risk on sentiment, gold's going to be going down. You want to be looking to short USD, JPY, Euro, CHF, and that's what we've seen recently. So that's how I'm viewing the market. That's why, in my opinion, it's really important to know where are we in the sentiment in terms of global investors, because that's going to be really determining where we're going to be looking in terms of potential investments, potential trades, all that stuff. So that's basically the video of the day. Really, really quick. Went over it pretty quickly, but not a whole lot to go over because we are swing trading. I am pretty active in the FX markets, but at this point in time, it does look like we are shifting into a risk-off sentiment due to the equities dropping, due to the fact that we could be seeing another sell-off. This could be a little bit bounce. But like I said at the start of the video, the main thing that we're going to see break in order for the confidence of the bulls to diminish and the confidence of the risk on investors to decrease would be, in my opinion, a break and a major support level within the equities market. That, in my opinion, is going to be the complete trigger for the risk on sentiment that could come into fruition if we do get some more selling within the equities markets. So that's going to be the overall video for today. Thank you very much. We will go over the questions at the end of the video, but that is going to be the completion of our recording. So we really hope you enjoyed it. It was a little bit quicker. Really went over the quick, fast, dirty explanation of what we're looking at, why we're looking at it. And now that's complete, we're actually going to look at correlations, negative correlations, and seeing what it all means. So we have this nice matrix, table, whatever you want to call it, index of 180-day correlation. So obviously, the shorter time frame it is, the less dependable the correlations are. One, meaning 100% positively correlated. So if you're looking at, for example, the Dow Jones Industrial Average, it is highly correlated with the S&P 500. That makes sense. It's also highly correlated with things like the Russell 2000, which is small caps, and the Nikkei 225, which is the Japanese stock market index. So when we're looking at 180-day correlation, we have a good understanding of what assets are negatively correlated and positively correlated, and somewhere in the middle. So going back to risk on, risk off assets, let's look at the US dollar or Swiss franc. So we see a lot of these risk-off investments are right here. So the 10-year T-notes, this is the US bonds. Let's see what they're highly correlated with and negatively correlated with. So first things first, we see negative 80, negative 71. These are extreme negative correlations, meaning that if the 10-year T-notes go down, there's a high probability that the Dow Jones, S&P, NASDAQ, and Russell 2000, all of those are going to be going up. And we have an extremely high correlation with 30-year T-bonds, which totally makes sense. And you got euro dollars. And then you see extreme negative correlation, like we saw within the stock market, in things like crude oil, Brent crude oil. This is diesel. We got stuff like gasoline. And we even have stuff like corn, soybeans, cotton, live cattle, lean hogs. So we're seeing already a good landscape in which we have an understanding which is risk on type of investments and risk off type of investments. Let's look at another one. We know that the Japanese yen overall is a risk off sentiment investment. When investors are worried, they go to the Japanese yen. When there's a lot of speculation, a lot of hype, a lot of opportunists looking at high ROI investments in the market, you're not really going to see people dive into Japanese yen. So we do see Japanese yen is less correlated with the overall market. We see that there's some negative correlations within the equities market. We see some positive correlations within stuff that is more risk off, like the Swiss franc, like the bonds, and then you're not really seeing a whole lot of correlation here. So let's look at another thing. Australian dollar. This is an extremely positive risk on investment or currency. So let's just zoom that in right now. Oops, did not do that right. So this is the ADU. Let's go like this. And we can see the Australian dollar extremely correlated with stuff like Dow Jones, with the Japanese stock market, with Canadian dollar, with platinum, silver, copper, crude, Brent crude oil, gasoline, diesel, stuff like that. And that is a highly correlated asset, so it's good to know. And then you see stuff like this, and then you see the 30-year bonds, 10-year bonds, euro dollars, all extremely negative correlated with crude oil, Brent crude oil, diesel, gasoline. So if you don't know how the overall market works in a risk-on, risk-off sentiment, definitely this is a really good way to gauge what investments are used in a risk-off sentiment and what investments are used in a risk-on sentiment. So hopefully that gives you somewhat of an idea of what I'm looking for, how I analyze the overall sentiment if we're on a risk-off or risk-on. So that's the overall video. Hopefully you enjoyed it. I will close this off and answer any questions, but in terms of the recording, I'm going to end it there. So thank you very much for watching, everyone. Hopefully you had a good rest of the week, or hopefully you had a good week, and hopefully your weekend is going to go fantastic. So thank you very much for watching. We really hope that you enjoyed it. You got some education, entertainment, something in the middle of it. That is our goal. If you did find this useful, it'd be great if you would subscribe to our channel. Thank you very much, and hopefully we will see you within the next video. Bye for now, and happy trading.